Welcome, my Auvorians, to the 18th of August midweek strategy software session update. My name is Steve Vetterl. I am the CMA, the risk manager for Auvoria Prime. Everybody that's new and joining us, I know we've got a lot of new subscribers. Welcome. Certainly good to see the list growing exponentially. Got some software coming in, 4 new pieces of software coming in. Do me a favor, if you've seen, I'm not gonna, I guess I could launch a poll. Tell you what, do me a favor, just in the chat room, if you would please, type in a Y for yes if you've seen the 4 software update video that Sal and the team's done, where it introduces the 4 new pieces of software, which we're working on essentially get the API set up. So while you're doing that, if you would please just give me a feel for who's seen it, who hasn't. For those that haven't seen it, I would highly suggest that you like priority 1, past work and family matters today. The next list, watch that video. It's really good. Let me just read the risk disclosure here. So trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So as I always suggest, please set up a demo first. I understand you're paying a subscription fee for that. I get it, but there is cost, in my opinion, involved in being able to make money, even though it's fairly low here in terms of monthly subscription fees. I guess that's a relative statement to the amount of income you make, but I really do suggest that you run a demo first before you put this to risk on live money. So if you're sharing any of the results from Alexander, Iris, or Einstein, which is really only allowed in that Facebook group, please do not use the term company recommended settings. So on all of your weekly calls, hopefully all the leaders are making that statement, which I would suggest. That way we keep ourselves out of trouble with all of the different countries' regulators. Trust me, these people are trying to make and build a resume for themselves. They're hunting for stuff like this. Don't give them the luxury. So Auvoria Prime does not have any recommended settings. We're not a financial advisory firm. We just license software that users can use however they want at their own risk and discretion. I can help you with that risk and discretion, but the software does come with default settings upon initial setup, which users have the ability to customize their settings however they want. Do keep in mind that Auvoria Prime is not a brokerage firm. We do not make recommendations. We don't run money. We just essentially sell software algos, which are called expert advisors. I'll just call them an algo. And we license that software and we sell amazing education. So all of our educators out there that do great work, the Hawkeye morning team with Iris setups, the Susan and her team with some excellent education, as well as Daisy Duncan, who put together a monster module. We're all working on, although admittedly I'm probably the slow one in the pack as far as getting my videos done, but I finally got my new webcam, so I'll be able to set that up. You guys can see my ugly face in some of these videos, but let's go through real quick. Just logging in here. I'm going to switch over to the other screen. Not going to be able to take too much Q&A today because I got a bunch of things to do, but the Q&A window is open. Please put in your questions related to this. Do understand that if you're just joining us and you haven't heard before, the key to the other 4 pieces of software is us getting the integration and the APIs connected to be able to offer this as a subscription. So there is a fair amount of work in programming to do this. This will take time. This is a process, even though we've been moving at a breakneck speed at Auvoria Prime. These things take time because they have to be right, because you can't just launch 4 new softwares to 8,000 plus customers and have everything work flawlessly unless your APIs are completely dialed in as far as programming. So my hat's off to the programmers. Let me switch over to the Forex calendar, go through this real quick. All right. So if you watch my Saturday call, there's not much going on, okay? Unless you're trading on Friday, which I typically don't suggest unless you are an expert, which I know there's a bunch out there that run the software all week. But outside of trading oil, there's really not that much going on. A lot of governments, including ours here, the dysfunctional folks in Washington, as I call them, they are on recess. They could still hammer out a deal, change the value, obviously, of some of what they're working on, but it's not. It's probably not going to happen for 2 weeks. So there's really just not a lot going on. It's typically the last 2 weeks of the summer. A lot of families going on vacation, including me this weekend. So I'll actually be still doing the Saturday call. We're actually going to take off. All right, so let's take a look at markets real quick. I would start off with the S&P. As you guys may have seen this chart before, this is an S&P one-day chart. Looking to possibly break out into all-time highs. I always suggest turning off the Bloombergs, the Fox Business, the CNBCs around this period of time because all they do is they bust out their cheerleading pom-poms and they're looking for the market to break out to a new high. What they're not telling you about these breakouts is that look at this volume that's absolutely dropped off. Now, this isn't any sort of like insightful thing, right? Because it's summer, so volumes are going to be lower. Let's take a look at the Euro US dollar. Now, well, what's happened here is we've busted above our, so we sort of burst above this area and got into, and a lot of that is almost exclusively related to this, right? So this is the US dollar, what we call the DXY in our acronym land here. DXY has continued to drop, as I had mentioned. We were in a tight range. Looks like this just under 94 was the high on this daily chart that you're looking at. Remember, each one of these candles represents one day. I'm not looking for you guys to become technical analysis experts. This is a tremendous insight into helping you guys with risk management. Start off by looking at the charts. The more you become familiar with this, don't need to become an expert, but you'll be able to just take a quick glance at what's going on is my genuine hope and be able to see where the movements in the market may be. So just under 94 came up against that resistance 4 days ago. Boom, off to what is more than likely going to be, which you're going to have to switch to a weekly chart to see here, our target goal down here near 85, which I can actually show you on a monthly chart. So this is probably, this whole area in here, which is the 200-day moving, is also, this is a big long-term moving average right here. See how we bounced off it? See how we came up against it and it was resistance and then we burst through it, and some of the problems we had with Brexit. And then we have not gone under it since. So the target is probably going to be somewhere in this range right in here. What this is going to do is this is going to send the euro and everything related to the US dollar higher. So if we're looking at the euro US dollar on a monthly chart, okay, so I move this to month, each one of these candles represents 1 month. You've got to look back to see where the big resistance is, and we're essentially kind of right at it right now, long term. You can see how many times we stopped on this point, which was the 200-day, and then we burst through it, obviously, as the dollar rallied, came up against it here in late 2018, and more than likely, this is going to be the magnetic area to pull price into. So the problem with when trends begin to start again, let me jump back to a weekly chart, is it's difficult for, and hell, even if we drop down to a 4 hour, okay? See, now we just recently burst above this level. So, but you notice what was rejected. And in the last 4 hour candle before this, created what's called as a doji, which is an indecisive candle. See if I can make it out. See how it looks like a cross? So a doji is an indecisive, meaning that it goes higher. It may go lower than the previous candle, which it did not. But in this case, it came back down. That's an indecision candle. Doesn't necessarily mean we're going to reverse and go lower. It's just you'll often see dojis print for a while, and then you'll have some larger type of move. And then looking at a 4 hour chart, which I'm willing to drill down to this level, even to an hourly chart, to kind of see what's going on. We're getting a little deeper in the weeds than I want to go right here, but just to give you guys just a little bit of exposure to what's going on. See, we burst above it, higher volumes, it's kind of rejected. We came back down, and now we're essentially, back up to the daily chart, we're essentially holding above this 1900-ish level, okay? So for the trend to continue, I would think, that we need to print at least a 4-hour candle, if not a daily, full complete printing in order to establish that we're probably going to be trending back up towards the 25 area. When it's going to come, how it's going to come, I don't know. So a lot of people say, well, this is great, Steve, you're teaching us all this stuff. So what's this mean? What this means is that if you are accepting trades, in my opinion, from something that's showing a potential fresh breakout of shorts from Alexander against a trend up in the euro US dollar, I would probably not be accepting those trades because we're breaking out. Now, will it continue to break out? Could I be dead wrong and it could fall flat on its face? Of course. But I can only tell you that price action does not lie. Charts do not lie, right? People lie. Fundamentals lie. But technicals don't. So take this for what it's worth. So what does this mean for the rest of the ring? If you're trading the euro US dollar JPY ring, let's take a look at euro JPY. This seems to be our most least loved currency, albeit it has had some good time over the past. Let's take a look at, by the way, hey, it looks like I'm getting a couple people, guys, on the chat that are not hearing me okay. Can you guys seeing my chart screen and hearing me okay? Just going to make sure we're still coming across solid here. All right, so we're hearing fine. Okay. All right, so what does this mean for the euro JPY? Because I get a lot of questions on this, and ideally I like to start with the DXY, right? And then I like to move into the euro USD, most traded currency, almost 30% of the volume goes here. And then I'll usually move into the other portions of the majors, take a look at GBP. But you can see very simply that euro JPY is trending. Okay, this is on a daily chart. Okay, now obviously, as the euro continues to increase, this is essentially pin action through the rest of the ring. What do I mean by that? I mean, you usually have one main currency, the main one, in this case US dollar, that will lead the currency ring around. So if it's weak, as the current environment is, that means that others are going to be strong, meaning that the euro will be stronger than the JPY, at least for now, to the point where we've had a really good, I could draw trend lines here if you want to see them, but essentially this is the trend that we've been in, for lack of a better drawing here. I personally, when we're in a trend like this, do not accept a lot of shorts unless we get to a really stretched out point. So for some reason, we actually zipped back up to the top of this trend, and I was aware of that, at least partially, and I saw a short come across on Alexander for those in the US with this software. I wouldn't have a problem accepting that short. Now, would I accept a short right here? We'd have to have a broken of the trend. So what I'm essentially recommending, and it goes a little bit outside of what I know a lot of our subscribers want to get into. They don't really want to get into the weeds of this, but I think it certainly behooves anybody that's suffered a beating inside of these types of algos with a martingale strategy. Remember, it's not a trending strategy, as some of our newer software is going to have that flexibility to switch into a trending software. You know, in a trending software, you want to buy the bottom touches of this trend. You want to sell the rips, you know, or essentially the rallies into the top of the trend line, or the opposite could be the case down. So, you know, if you have an inordinate amount of shorts coming in, Euro JPY signals, at this point, I'm just not a fan of accepting it. Now, one problem with this whole thought process and this advice that's slightly different related to charting that I'm giving to everybody is that it's slightly stepping in front of the software, which I've advised against, and saying, hey, I'm better than the software. And I actually don't have a problem with that if we are in a pronounced trend in that particular currency, or for that matter, all the currencies that one may be trading in the account, whether it be one or two or three. So that's why I try to just focus on going through the charts of just the main ones. I mean, for those that trade a lot of exotic currencies, you guys can always go into trading view on your own and do your own charting. This is not complicated stuff. My my son, who's in 6th grade, can chart. He's a smart kid, but he's also had just a very generic education for me in understanding patterns. So let's take a look at GBP NZD. So I'm picking up a little bit of slack for Jesse as he has resigned from the firm. Let's see here. So this is all related to strength, obviously, of GBP USD, right? Look, we're coming up against a big area here. Look at this, just burst into this area. It's been the case literally since the beginning of July in the movement up. This should not surprise GBP NZD traders because, one, we've gotten above the 200-day on the daily chart here again. And, but we're up against jump back to GBP USD on a weekly chart. So let's take a look at the GBP USD first. So see right here, let's see if I can draw this line. Sort of sloppily drawn, you guys get the idea. It's probably going to be the target right there. And as the dollar's continuing its fall, right, everything related to the dollar is rising, at least in terms of majors. So it's putting pressure on any kind of trading system that's going against it. I call it stepping in front of the train. So one of the big things of risk management, and one of my biggest roles in my other side of the business, trading futures and individual equities and so forth, and DFA funds for clients, is I try not to step in front of the train. And I try to go with the trend. What's the trend right now in equities? Well, tech stocks leading, right? Anything in tech, for that matter, safe retailers like Home Depot, which actually just hit a new high today, and Walmart. Companies are doing excellent in this pandemic type environment. You don't want to be out there trying to short this stuff. It's like the guys I see out there constantly trying to short Tesla. And then short interest gets all popular and all full, right? And what happens to its price? It rips higher as they barbecue the shorts. It's a forced liquidation, which is essentially a buy to close out a short or any long. So I just don't want to be in that from a risk management standpoint. I prefer to trade with the trend. You have an overwhelmingly higher statistical win rate when you're not fighting the trend. So if you're in a definable trend, as we are in at least these four currencies that I'm showing you guys, and certainly CAD can play into this. I don't have enough time to spend going into that. I prefer to just touch upon these, get you guys somewhat expert in this area. Now, with the USD JPY, this one's been a bit puzzling to me. So just looking at charts only, you can see we have on a weekly situation, we have a really big support level here. Every time we've gotten to this level, we've bounced. We had that huge rip below through it. Back towards March when this pandemic first hit. But this particular monthly candle is a real outlier. So I would imagine the magnet's going to be the 104 area again. And we're going to have to reassess once we see all this. So sorry if I've confused anybody, but I think it's time kind of for us to move into maybe a slightly more deeper discussion of chart techniques. Now, one thing I have not paid a lot of attention to, you guys, because as many of you may not know, I don't run Alexander because I'm a financial advisor. I have the ability to have access to the more semi-automated versions of software like Einstein. So, and I don't have the time to be accepting trades all day long and every day like a lot of my team guys do. So, but I'll tell you, there really is, especially in my opinion, this last few months, there really is some serious benefits to trading with Alexander because you can decline certain stuff. I can't decline anything with Einstein. I mean, it's just taking whatever, right? I can turn it off, change the settings, obviously, but you guys have a luxury, in my opinion, that you have the ability to decline stuff, Anything near the top of any of the trends that I've shown you, you can go on and set up your own charts. Hell, TradingView is only like $20 a month, and this stuff's cheap for pro. I'd suggest everybody has a subscription to this. So let's see, what else do I want to say? As many of you may know, gold's getting back over some of these crazy moves. But right now, in my opinion, this is the leading indicator right now around the world, especially in currency land. This is the first thing I look at. Okay. You can look at the euro, US dollar, whatever, but you want to get an idea of what the dollar is doing first. Okay. And then I look at global equity markets. All right. So let's answer some questions. Elizabeth, always with the great questions. Good morning. What's your outlook for euro, US dollar? So hopefully you know what my outlook is now. Okay. And if you don't, let me know. Maybe came in late. Yeah, Elizabeth, if you want, you go on to my, a lot of these questions that get asked about max levels and hedging and all that. I have a huge write-up on my Telegram channel about that. Just go read it. Michael asked, how do you know when to enter and exit the market? I don't know if you saw the whole technical analysis that I did, Michael, but it's all based upon what's going on with the charts that I just showed. Not sure if you caught that or not. Let me know if you didn't. Do you think the US dollar will go back up? I might have missed it. That's a good question. Do I think the US dollar might go back up? Short term, possibly, right? Next 5 minutes, 10. Those aren't important, though. All that's important is the daily moves on the dollar. We're looking at a weekly chart because you have to go all the way back out to see what's going on. I even looked at the monthlies on this thing, right? Still headed at 85 level there, Jasmine. Thanks for the question. What does the US dollar trend down mean for Einstein? Because it's only taking longs on the US dollar JPY. Now, I can't confirm that, Sarah, because I don't know. I haven't taken a specific look at the trades in the last couple of days because I've been busy. As some of you may know, the state of California and the rather draconian rules have decided to have all of our children in this state at home with online learning, which started essentially Monday. So my wife and I have been completely tied up making sure the kids are getting the computer set up. We got everything running smooth. There's been a lot of disruptions. It's taken a lot of my time. So hopefully we're all good so far. And so what does US dollar trend any process? Let me take a look at the US dollar JPY. It's only taking longs right now. Let me just switch back. Well, it may be seeing something on a more shorter period of time that I'm not seeing. We've had a fairly protracted move, even if you look on the 4-hour chart down. So I don't know if has it been taking longs all the way down, Sarah? That would be the question I'd ask. We're looking at a 4-hour chart. If that's the case, that's the great thing about Alexander. He could have declined all of those longs and just taken shorts. So Elizabeth, you asked this question a lot, so I'm not sure if you're hearing the answers over the last couple of weeks. So anybody that's in drawdown on euro US dollar, I'm not going to give you any advice on that. Just let the software play out. But if you are in the US and you are taking or essentially accepting all of the trades that come off of Alexander, you have the luxury now to be able to decline some of them depending on the currency. By the way, it looks like there's a lot of chat going on in the chat room. I prefer to answer questions in the Q&A. That way I can delete them and move to the next question. Billy asks, for those stuck in sell orders for GBP NZD since and around July 23rd, what would you have suggested to do, as the trend has been bullish since then? Just wait it out and hope for a major reversal. You can. I guess ideally, had I started some of this technical analysis back, and I know, Jesse, you did a tremendous amount of technical analysis back at that period of time, so you probably had a lot more logic to put into the GBP NZD discussion than I've had. But really the bottom line is just looking at the rip in the GBP hasn't been a surprise because it's all been US dollar related. So let's drop back to 1 week. Actually, you know what? I'm going to take a look at a monthly chart on this first. Sometimes you just got to start way back. So we had a huge, and then we're ripping back up in the monthly chart on this right now. So it looks like the 1900 area has been somewhat of a floor. Now we're moving back up towards what arguably somewhere in the 210 area, something like that. Is what I would look for. Doesn't mean we're going to go straight there. Yeah, I could be wrong. But ideally in this, I would only be accepting longs at this point. What's your strategies with developing agent? No. Pratik, did I get the first name right? Did you hear the first part of my call? I gave all the strategy on EJ, EU, and EJ. Not sure if you saw that in the beginning of the call. I went through some of that. So if we were stuck in all sell orders in US dollar, 5 levels just waited out, how long will it likely take to retrace? Great question. Don't know. Don't know the answer to that. That's a crystal ball question, Anonymous. So the question is, so if we were stuck in sell orders in Euro USD, let me just jump back as we're back to the. So remember, here's a monthly chart again, Euro USD. So we know where we're kind of looking for. Doesn't mean that there won't be lots of retraces along the way. But the more you drill down into the chart, like looking at the 4 hours as an example, you know, we had that doji that printed. Take this down here. Notice we're at the same exact price point right now where that doji closed, right at this 93.60 area. I should say 1935 area. So sort of at a lull, if you will. You got to let those wait out. So if you're stuck in sell orders, which I don't know that I've accepted as soon as we saw this breakout. So as of what, 2 hours, basically a day ago, I would have stopped accepting, which would have essentially put us back into Sunday. But as soon as we broke past this 1900 level, I wouldn't have accepted any more sells because we're moving up to the next level. We'll only accepted buys. If that makes sense. Sorry if I'm confusing anybody, but we've got lots of questions here. Jeanette, how are you? Good morning. Because everything is based on the US dollar. I have EU buys and UJ buys. Can't see getting out of both simultaneously. Yeah, you know, a lot of times I think what the short term, I call it the horse blinder syndrome, is with a lot of traders, and I have a tendency of following this myself, is it's more like the gratification, what have you done for me lately? But the great thing about Einstein and Alexander is even though some of those trades from back when, whatever that date range may be, are stuck in those trades, software is still taking pop shots along the way and making money to climb out, which you guys have all seen ad nauseum on all of those my FX book charts. So let me shift over to one thing here real quick. I want to show you guys something. Let me jump back to page 2 of the risk disclosure. I'm going to do one thing. By the way, guys, if you haven't, make sure all the guys in your team have gone through the dashboard, all the onboarding stuff. We're still getting a lot of questions about this. Let me also log on to my FX book. So you can put the answer to this question in the chat room, if you could, please. I can show, and I don't know if this has been shared around a lot, but I can show in our next segment, if you guys want to see it, some of the longer term my FX book. For those of you who don't know what that is, it's an analysis system you're going to see in a bit here if I could ever get logged in. It allows you to break apart, break down what's going on inside the accounts. Okay, so let me switch over. So here's the MyFX book for the large account we're running. This is on the conservative settings. For those of you who don't know what that is, I highly suggest that you watch the May 30th presentation with myself and Tyler McKechnie on the he's one of the heads of our R&D team. He's also one of the developers of Gearbox, which is one of the 4 softwares that are coming out. So looking at the main account, it's up about, I'm not reading this stupid blue window, it's up 0.71% for the week. So it's pretty good. So far this month, account's up 4.5%. Remember, we haven't done anything with this account, you guys. We haven't done anything with this account since it started on the beginning of April. This account has been running. We funded it with 25K. Actually, just a little bit under 24K, 256 we funded it with. Although I call it the 25K account because that's where it's at now. We funded this way back in, and the only thing we've done is we've made changes to the stop loss. So had we not, as you can see when you look at the history on this thing, if you guys ever want to just go back and look at this, you can just go history, net profit. So do a search by all trades, okay? Essentially, history means they're closed trades. See all these trades right here? Look what we probably would not have suffered from had we had that 250 with stop loss higher, right? Now, the argument sure is a couple of these would have gone more than that. But our stop loss is now at 500. But look at all the losses we took. And I could drop this in a spreadsheet, but this is probably several grand in losses. Yeah, about $2,000 in losses here because of the fact we had the stop loss, in my opinion, too tight. So stop loss here. We got stopped out on all these trades. So had we let those run, we more than likely wouldn't have an account that's considerably higher in value than the roughly 17% this account's up right now. So, and it is in drawdown if you look at open trades right now. Actually, looks like they're all closed out. All right, cool. So it actually, this just answers some of the questions. It actually climbed out of a little bit of a hole, as you guys can see here. But just looking at the open trades, still in about a 413 euro drawdown at this point. This account has really conservative settings. It's 0.01 per 3 grand, and it has the high volatility settings. And let's take a look also at the here's the Einstein. This is our different ring account. This is done well because it has not suffered the carnage of JPY and the Euros rippings on the other account. But you guys can see this has been slow and steady. Again, Einstein, conservative settings, 0.01 lot size, because this was funded as a 3K demo, whereas the other Euro account's a live account. But you guys can see how well this thing is done. So for those of you with ye of little faith, as I often say, we're beginning to put a track record, not that long, we're beginning to put a track record and doing some really volatile stuff on a different ring. Now, does this mean you should change your ring? No, because we haven't put enough data together on this, in my opinion. But that's why we're running it. It's actually done quite well, and it has, the U.S. dollar in it. And here's the summary. So you've had most of the profit coming from GBP USD. Obviously, as that's lifted up with the decline in the euro US dollar. But secondly, was the US CAD currency did pretty well. So we'll continue to show this. If you haven't seen the links to these, I can certainly post them. I think I did post them in the Telegram channel. I don't know where your stop loss is at, Elizabeth. So I know we have our set of 500. So here's a question. If you're saying the euro US dollar is trending up, and and I've shorted trades. I have short trades from last month. Is there really a way to recover from that? Well, as the software continues to win on some of those lost trade or losses that are still actively open that it's holding from whatever, I would assume those are probably sequence 4, 5, 6, 7, right, in level trades. They're larger in size than those level 1, 2s, or 3s. I would let those play out at this point. Notice the common theme, guys, other than accepting new trades with Alexander, for those in the US or those running Alexander in other countries. Common theme here is not taking trades against the current trend, but with it. That's just a lower risk, a more conservative type of position. What I'm telling you, though, and trying to get you guys introduced to, this is a fairly new concept, this also does require you to take a look at charts during the day. So, ideally, at a minimum, I would probably spend 5-10 minutes on this and kind of have an idea if things are moving like I've explained, like they are up on everything against the US dollar. And then those main pairs are leading around some of the minors because of the strength of things like the euro or JBP. JBP, that's a good one. That's a new currency. So who's based on those can't seem to have those simultaneously. Yeah, that's going to require some work, Jeanette. I would have to see the details on what's going on, but you can assist to that by not accepting trades that are against the trend, in my opinion. But that's a long-term trend, by the way. I see one of the questions asking me that I prefer long-term trends. They are much, much more reliable. Yes, Einstein will compensate the drawdown. I mean, it knows that those trades are in drawdown. That doesn't mean it takes other trades because you're in drawdown, because Einstein is just looking for trades all the time, both up and down. Billy asks, a GBP NCD, would you suggest increasing starting lot size to buy trades to counter the current major drawdown of the sell trades and replace manual trades, large lot size? Now, you can do that. I'm not going to get into explaining, Billy, how to do that inside a already, I'm assuming that you're using Einstein. If I'm correct, you're somewhere else other than the United States. So you can certainly do that, but the most important thing is make sure you're doing it if you're in a live account with money you have the ability to lose, because that's taking a much more aggressive position. Also requires a fair amount more work, but you can dig yourself out. Daily's good, weekly's even better, James. Monthly's about as solid as it gets as far as long-term chart analysis. Stop loss is 400 on this account, guys. This is, I'll show you. Stop loss is a 400 on our NZD, USD, GBP, CAD ring right here. But it's at 500 on Einstein and Alexander. Used to be 250. We took a bunch of trade losses. But since we have the ability with 25K, because that money is not needed at all, we can afford to risk that. We decided to move the stop loss up to 500. Would have served us well over the last month. Count probably 10% higher. Partially my mistake. But we are learning, aren't we? Let me take a quick peek through here. The problem with GBP NZD, Billy, is that, and let me switch back to this. This currency is just a beast. And if one looks at, it offers tremendous opportunity for trading, as you can certainly see ad nauseum from some of Jesse's analysis. Look at the moves in this currency. Okay, now granted, this is a monthly chart. So, but look at the move here. Yeah, I don't know that there, unless you were catching this short and you rode the thing for the whole month, right? I don't know of too many EAs that could survive this kind of move. So now, granted, this is monthly. I get it. We can always dive down into a weekly chart, but look at some of these moves. I mean, this move right here blew a lot of accounts out. Nothing we could have done. If you were lucky enough to have caught this ridiculous move, if you would have even gotten a fill, which I doubt, somewhere up above, the 217 area, this would have just been a monster for you. But anytime you're seeing these kind of moves, it's difficult for automated software. Hey, and you know what? I hope I'm wrong in some of the new pieces of software that can play with this. Okay. Now, I know one of our pieces of software, as a matter of fact, actually, all of the four new ones coming out, they have an optimized for a particular set of currencies. So in some cases, it's as much as 14. And one of the pieces of software coming out is a one currency, and that's the Singapore US dollar. Okay. So we're not going to have to be getting into, should I change this currency? Should I add this one in? Add it. You're going to be running on some of the other four softwares on, but I guess in a perfect world, it'd be a little more costly this way, but I'd imagine that they're going to be coming out with some license discounts for multiple licenses. But ideally, what I would want for somebody that has a fair amount of money to invest is to have like one or two licenses and be running different types of EAs. Maybe you're running an Alexander along with an Iris and or a variable, as your sort of group trading all different currencies. So it'll require a little more involvement, in my opinion, on the individual subscribers as far as making sure everything's running right, but it's just a more diversified portfolio. Patrick asks, would you recommend trade stop loss at over 250 for, I'm assuming this is a 250 pip stop loss, if I'm understanding this question correctly, for 2 to 3K count trading UJ, EJ, EU, or best to keep it at 250. I would have the stop loss higher only if you can afford to put this money more risk. This is rent money or mortgage money or money you use it for food, for your kids or whatever. It really should not be trading in a live account, in my opinion. So as I've gotten a couple of emails with people that took some losses, were emotional about it, but as a deeper dive uncovered, they could ill afford to lose the money in every single one of those cases. And as many of them that emailed me have heard me exhaustively and sounding like a ridiculous broken record on these calls talking about risk, they didn't pay attention. So guys, I don't really have a lot of sympathy for you if you do that. You're at your own risk at that point. So just first start off with an assessment of investment capital, what you can afford and what you cannot afford to lose. I don't have any projection for oil. I think right now that's taking somewhat of a back seat, guys. I don't trade oil that actively. Question here. Let me just shoot over to the VPS. So here's a range multiplier. The Klubert's asking about. He said, "Hey Steve, if I leave my range multiplier 135, okay, and position size on 115, so it's one below it. Is this an aggressive setting?" So this is the conservative settings that we have suggested. All right, so looks like we had some good GBP and ZD chat going on in here. All right, let's do this. So Saturday, I'm trying to make sure I can broadcast. I think I'll just broadcast from my home studio here. Got a little studio you guys will see eventually when I get this damn camera working. Going to try and shoot that psychology trading piece that I'm going to have on the onboarding group. So if anybody's got any questions, anything, you can send me an email. It's svetteral@auvoriaprime.com. Remember, if you do send me an email, I need you guys to include a link to the MyFX book. just like you see here. If you're in my FX book, I highly suggest everybody hook this up to their demos and or their live accounts. As you can see, we got this hooked up to a ton of different stuff going on. And we have about 6 or 7 other of these, which just as much linked up. It's a pain in the butt. Sometimes you can't get this knucklehead trading privileges not verified thing straightened out, of which I am a complete idiot at. I have all the other guys do this for me. But if you get the MyFX book hooked up and you've got both the green check marks, this helps me a lot in being able to see what's going on. And you can send me a screenshot also of the settings window and an explanation. We can try and get it straightened out for you. But wish everybody a safe and happy week. Hopefully everybody's in a positive mood going forward. Let your hearts not be troubled about the pandemic. At some point, I think they will have a vaccine, right? Let's hope and pray for that. Everybody that's affected by this, our prayers with you. I am Steve Vettel. Today's the 18th of August. And I guess I'll drop the mic. So be well.